Over the last few months, the markets have not gone anywhere, with small caps taking a beating of about 10%. Add to the fact that the market valuations still remain elevated, as we discovered in our recent video. This makes it quite a tricky market situation to navigate. So how are India's top fund managers to whom you are giving money every month investing in this period? And more importantly, how are they managing your existing investments? In this video, we'll try to give you an answer to this question. We will check how 5 prominent mutual fund industry veterans are positioning their portfolios. We will assess their portfolio moves from 3 angles: cash positions, sectoral moves, and market cap moves. But to benefit from insights from this video, you must watch it till the end. Let's first take a look at the panel of our fund managers. Since there are many fund managers with good track records, selecting the top fund managers for this analysis wasn't easy. To shortlist the fund managers, we looked at equity fund categories, which are comparatively more flexible in terms of portfolio shifting. This was important because if the fund mandate itself is quite skewed, that may not truly reflect a fund manager's independent choice. So, we considered flexi-cap, multi-cap, large and mid-cap, value, focused, and ELSS funds. These categories offer reasonable freedom to shift portfolios. We then selected the fund managers of the largest funds by assets. We also considered the other diversified funds that these fund managers are managing. We ensured that these fund managers have been managing these funds for at least a couple of years so that the portfolio moves do have their signature. Now on your screen are the names of the managers along with the diversified funds they are managing. Our list of top fund managers include Rajeev Thakkar of Parag Parekh Mutual Fund, Sankaran Naren of ICICI Prudential Mutual Fund, Harsha Upadhyaya of Kotak Mutual Fund, Neelesh Surana of Mirae Asset Mutual Fund, and R. Srinivasan of SBI Mutual Fund. Now do know that for Naren, we have considered ICICI Prudential India Opportunities Fund too. This fund is a special opportunities fund, but it can invest freely across market caps. That's why we have included it in our research. Neelesh Surana's funds deserve a special mention. Mirae Asset Large and Mid Cap Fund and Mirae Asset ELSS Tax Saver funds were the star funds of their times. However, over the last couple of years, their performance has moderated. ELSS funds in general have lost their charm due to the higher appeal of the new tax regime, where this fund no longer qualify for tax benefits. Still, Mirae Asset Large and Mid Cap and ELSS funds together command about 71,000 crore of investors' money. So, it would be interesting to know how Surana is positioning his funds in the ongoing demanding phase. Interestingly, all 5 selected fund managers are also CIOs of their respective fund houses, as they have decades of experience. Moreover, they have been managing their respective funds for several years in most cases. So, they have a deep imprint on their respective funds. Now, across the mentioned funds, these fund managers manage a mammoth 4.66 lakh crore. That makes these fund managers key players in the Indian stock market. Alright, let's now study the moves by these fund managers across the 3 areas we spoke earlier: cash holdings, market caps, and sectors. Let's start with cash holdings. But before that, here's something important. Many of you come here for the kind of mutual fund analysis you rarely find elsewhere: rolling returns, downside protection, and so on. But knowing how a fund behaves is one thing. Figuring out how to use that information in your investing decisions can be difficult because each of us have our own risk comfort and goals. That's exactly why we built ET Money Select. It's a personalized shortlist of funds that stand out from 2,000 mutual funds, not just on returns, but on how consistently they deliver and how well they protect when markets fall. The list is personalized to your risk appetite and gives you funds for your short, medium, and long-term horizons. And for every fund, you get a simple note explaining how it invests and what drives its performance, plus an alert if the fund starts to dip or a better alternative is found. So do check it out. The obvious question to ask here is, why worry about cash holdings at all? Cash holdings can act as a proxy for market valuations, so a high cash holding may indicate a cautious stand by the fund manager owing to elevated valuations and vice versa. But there's an important caveat to this theory. Many fund managers and AMCs may not like to take cash calls. In other words, they may prefer to be fully invested at all times and leave the decision of taking cash calls to the investor. With that in mind, let's check the cash levels in the funds managed by the selected fund managers. We will check 2 things here: the absolute level and the trend in cash holdings. Let's check the cash holdings of Rajeev Thakkar's funds first. Both Parag Parikh ELSS and Parag Parikh FlexiCap funds have high cash levels. Parag Parikh FlexiCap has maintained cash levels of about 20%. Now, this suggests a cautious stand by Rajeev Thakkar on market valuations. Now, in terms of trends, cash levels have come down in Parag Parikh ELSS fund from about 18% to 13%, but they have not moved much in Parag Parikh FlexiCap fund. On the other hand, Naren has maintained high cash levels too, but they have started dropping. Possibly, Naren has started deploying capital, which suggests his openness to investing in the current times. The steep fall in the cash holdings of his value fund may indicate he is finding market valuations reasonable now. Harsha Upadhyaya's funds and Neelesh Surana's funds have not been very high on cash. Chances are, these two fund managers prefer to stay invested rather than take cash calls. Finally, Srinivasan's funds throw a conflicting picture as far as cash allocations are concerned. Now, both his funds have decent cash levels, but cash allocation has fallen in his multi-cap fund and risen in his focused fund. It is likely that fund level objectives and strategies are a bigger driver of cash allocations for Srinivasan than market valuations. Overall, the market view picture based on the cash allocations of the selected fund managers ranges from being cautious to being bullish to being agnostic to being fluid. Now, this brings us to the next section, market cap moves of the selected fund managers. But before that, let me request you to subscribe to this channel if you aren't already a subscriber. And don't forget to press the bell icon so you never miss a video from us. Alright, the first in this is Rajeev Thakkar. Rajeev Thakkar appears to have gone bullish on small caps as evident from the change in the allocation to small cap stocks in Parag Parikh ELSS Tax Saver Fund. The fund's allocation to small caps have changed from 8% in December 2024 to 10% in June 2025 to about 15% in December 2025 amid a falling small cap index. However, the flagship Parag Parikh FlexiCap fund shows no major changes in market cap allocations. Now, one possible reason for that could be the massive size of the fund at 1.39 lakh crores. Such a size can make it difficult to take meaningful high exposure to small cap stocks while staying within the regulatory limits. On the other hand, Naren seems to have gone bullish on large caps, as witnessed in both of his funds under consideration. In ICICI Prudential India Opportunities Fund, large cap allocation has increased from 62% to 67%. In ICICI Prudential Value Fund, it has been raised from 76% to 83%. Now, a similar trend is seen in Harsha Upadhyaya's Kotak ELSS Tax Saver Fund, where the large cap portion has risen from 63% to 72% over the last 1 year. This is accompanied by a decline in small caps from 17% to 8%. However, the other two of Upadhyaya's funds, Kotak Flexi Cap and Kotak Large Cap Mid Cap, remain steadier. Now, Neelesh Surana of Mirae Asset Mutual Fund seems to have turned bullish on mid caps, with the mid cap allocation in Mirae Asset ELSS Tax Saver inching up from 14% to 16%. His faith in small caps, however, seems to have receded, as seen in the declining small cap allocation in Mirae Asset Large and Mid Cap Fund. The broader fall in small caps may likely have a role to play in this too. Alright, now let's take a look at the funds run by R. Srinivasan. These funds have shown the sharpest changes in market cap allocation. In SBI Focused Fund, he has successively raised the large cap allocation from 34% to 47% to 53%. Alongside, he has trimmed the mid-cap allocation from 33% to 24% and then to 15%. Small caps also saw their exposure reduce from 9 to 8 to 7, though this can also be due to fall in small cap stocks. Now, in his multi-cap fund too, large cap allocation has gone up from 32% to 36% to 39%. The mid-cap exposure went up from 25% to 34%, but then fell to 28%. Lastly, the small cap exposure fell from 35% to 24% and then rose to 28%. Now, given multi-cap funds must hold at least 25% in large, mid and small caps, these changes must be seen in that light as well. Overall, it won't be wrong to conclude that Srinivasan is betting on large caps and managing the mid and small cap exposures as per the constraints and requirements. Now, based on this fund activity, here is the summary of the fund manager moves across schemes. 3 out of 5 fund managers, Naren, Upadhyaya and Srinivasan, seem to have become bullish on large caps, while 3, Upadhyaya, Surana and Srinivasan, have turned bearish on small caps. Alright, so this brings us to the third section, sectoral moves of top fund managers. Now, assessing sectoral moves has a practical challenge. A fund sectoral allocation can move due to two reasons: fund manager's intervention and stock price movement. If the allocation of a fund moves due to the stock price movement, that itself may not indicate the degree of the fund manager's bent towards a particular sector. Now, to mitigate this issue, we saw the sectoral allocation in light of movements in sectoral indices. For instance, if a certain fund's allocation went up in the auto sector over the last 1 year, we assessed this shift in conjunction with the movement in the auto index. Since the auto index itself delivered 18% over the last 1 year, we then looked at the quantum of change in portfolio's allocation to assess if the rise in allocation is due to the fund manager's intervention or due to the stock price movement. Of course, this is an estimate rather than an exact picture, yet it can be quite useful to understand a fund manager's degree of preference or avoidance of a particular sector. So, based on this methodology, let's see how the selected fund managers have changed their sectoral preferences. Rajeev Thakkar seems to have turned bearish on the auto sector. In spite of a rise in Nifty Auto Index of over 18%, the auto sector allocation in his funds have either dropped or remained steady. It also appears that he is positive on the IT sector. That's because amid a fall in the Nifty IT index of 15% in the last 1 year, his allocation has remained steady in Parag Parekh FlexiCap fund. The fall in allocation in Parag Parekh ELSS tax saver fund could be due to the fall in the stock prices. Next comes Naren. Naren is clearly bullish on IT. Amid a falling index, his allocations have gone up in both his funds. Now, given the positionings of his two funds, he has reduced his exposure to the auto sector after its run up in the value fund. However, the exposure to the auto sector has gone up in his opportunities fund. This shows that individual fund objectives and strategies are crucial while determining sectoral allocations, and it should not be surprising to see the same fund manager take opposite bets in the funds that they manage. But Naren is clearly bearish on banks and healthcare. Over the last 1 year, the Nifty Bank Index is up by about 20%, but the allocation to banks has fallen in Naren's funds. On the other hand, while the Nifty Healthcare Index is flat, the exposure to the healthcare sector has dipped in Naren's funds. Next is Harsha Upadhyaya. Upadhyaya seems to be positive on banks. Over the last 1 year, the Nifty Bank Index has gone up by 20%. Over the last 1 year, the Nifty Bank Index has gone up by 20%. Still, the quantum of increases also suggests some intervention by the fund manager. Upadhyaya seems to have turned cautious on infrastructure and healthcare spaces. In all his funds but one, he has trimmed the exposure to these sectors. Now, over the last 1 year, the BSE India Infrastructure Index is up by about 5.5%, and the Nifty Healthcare Index has remained flat. So, these moves could signal a cautious stance. Neelesh Surana of Mirae Asset Mutual Fund is clearly bullish on the healthcare sector. In spite of a flattish performance by the Nifty Healthcare Index, his allocation to this space has gone up. He is also positive on the FMCG sector. In spite of a fall of 11% seen in the Nifty FMCG Index, the allocations to the FMCG sector have gone up in his funds. Now, one sector where Surana seems to have gone bearish is crude oil. Against the Nifty Oil and Gas Index's 16% returns over the last 1 year, Surana's allocation has dipped, suggesting a negative stance. Finally, let's check the sectoral moves of R. Srinivasan. Srinivasan's favorite sectors appears to be power, where he has significantly increased his exposure. The BSE Power Index has generated a return of just 7.7% over the last 1 year. So, the significant rise in Srinivasan's exposure is likely due to his intervention. Now, another sector that appears to be Srinivasan's favorite is the chemical sector. In spite of a drop of about 8% in the Nifty Chemicals Index, over the last 6 months, Srinivasan's allocation to the chemical sector has broadly gone up. Now, while the Nifty FMCG Index has corrected by about 11%, Srinivasan's exposure to this sector has fallen quite steeply, suggesting he is bearish on FMCG. Now, on your screen is the summary of the sectoral moves of the 5 fund managers. Okay, now let's summarize the findings of this video in the concluding section. In this video, we analyzed the portfolio moves of 5 top fund managers. Rajeev Thakkar, who manages Parag Parekh FlexiCap and Parag Parekh ELSS funds, appeared to be the most cautious of the lot as far as cash holdings in his funds are concerned. but cash allocations have been falling in his ELSS fund, and in that, he has also started taking higher exposures to small caps. Because ELSS funds have a lock-in period of 3 years and hence allow fund managers to take a comparatively bolder view, Rajeev Thakkar may be likely betting on the small cap recovery in a couple of years down the line. His value mindset is revealed by his exposures to the IT sector in both his funds and profit booking in the auto sector. Naren is also getting more confident of market valuations as seen through the falling cash levels in his funds, especially the value fund. But by betting on large caps, he may be hedging against negative surprises. This suggests his cautiously optimistic stance. Like Thakkar, he is also positive on the IT sector as a value bet. His approach in the auto sector is not contradictory but guided by the requirements of his two funds. Naren also appears to be pulling out money from banks and healthcare sectors. Harsha Upadhyaya appears to be in favor of staying invested in the market as seen through the cash levels in his funds. But he is likely managing the risk by betting more on large caps and trimming his small cap exposures. Now, contrary to Naren's moves, Upadhyaya seems to be bullish on banks. However, both Naren and Upadhyaya seem to disfavor healthcare. Infra is another pocket that Upadhyaya seems to be less positive on. Like Upadhyaya, Neelesh Surana also prefers to stay invested in market, but his liking of mid-caps sets him apart from the rest. Being neutral on large caps and bearish on small caps suggests calculated risk-taking on Surana's past. Now, unlike Naren and Upadhyaya, Surana doesn't mind betting on the healthcare sector. FMCG is his another favorite bet, but he is reducing his exposure to crude oil stocks. Finally, Srinivasan seems to be driven by fund-level dynamics rather than his market valuations. His conflicting cash moves suggest his fluid style. Srinivasan is moving to large caps while reducing his mid and small cap bets. His offbeat sector choices include power and chemicals, while he remains to be less positive on FMCG. Overall, the common thread that runs across all fund managers is their attempt to contain risk in their own ways, while aiming at delivering decent overall performance. As we saw in one of our earlier videos, containing the downside is indeed the real game, and all these fund managers appear to be doing just that. For an investor, this is the biggest takeaway. And with this, I've come to the end of this video. I hope you found it useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.